weather. Can you see my screen? What is going on here? There we go. There's an update on Streamlabs, and it broke everything, so I had to figure that out. I'm a little under the weather today. My kid is sick for the first time, and of course my wife and I caught it, so I'm losing my voice. I'm going to try to struggle through this as best as I can because it's an important day. There's a lot to talk about here, so if you have any questions, try to leave them to the end of the session, or actually answer them now. I'll leave them to the end of the session to go through them. First things first, I want to congratulate Dustin, IW Beyond. He's been with us for many years now, going on, I think, his 4th year, if I'm not mistaken. And he's hit a bunch of $100,000 wins, but there's one in particular that I thought was really special, and this is this A-Lab trade here today. A topic of conversation earlier in the Discord was you have to get comfortable buying when it's uncomfortable. Right? The entries that we took in late April and early May, and then even into June, we were never quite fully comfortable taking the trade because of what we were coming out of from February through April. We saw that historic 20% correction. It was one of the fastest ever. It was scary for everybody. But that's why you have a system with rules in place to tell you when odds are on your side to get back along the market. We took that, and now this is why you're seeing these massive wins. It's not random or luck. It's a product of the system and being able to execute it regardless of whether or not you feel comfortable. By the time everybody started feeling comfortable, which was in late July and early August, the easy trade was over, and now people are chasing things higher, and we've obviously been able to position ourselves in front of that. Which brings me to my next topic of conversation, animal spirits. So again, congratulations, Dustin, big win for us as a whole, but obviously for you, something to celebrate. I know your kid needs it. He goes to an expensive university. Let's talk animal spirits really quick. The idea of animal spirits. Essentially, animal spirits are unbridled buying or selling pressure that completely detaches itself from any real logical process or feasibility in the market. What does that essentially mean? FOMO, either to the long side or to the short side. In bull markets, animal spirits essentially means everybody can't get enough of what's going on in the uptrend, and therefore all of the rationality of don't buy things that are already extended, wait for pullbacks, don't buy overvalued contracts, that goes out the window, and people go, oh shit, I'm out of position, I need to get in, let's fucking go. And it essentially creates this positive feedback loop where people buy higher prices and continue to buy higher prices and continue to buy higher prices, and we're in that right now. You can very obviously see that we are in animal spirits, particularly in the crypto market. Right? With the Ethereum move, the Bitcoin move, people can't get enough of this stuff now. It's in the news headlines. Tom Lee's out there saying that Ethereum is going to be $100,000 by the end of 2027, and for our sake, I hope he's right. Probably not, but I hope he's right. $10,000 price target by the end of 2025, so literally within the next 6 months. That would be great. We have a lot of exposure. They'll be able to capture that and make a lot of money. We've made a lot of money. We're going to make a bajillion fucking dollars on that trade if that actually occurs. Do I think it's going to happen? No. But I think, who knows? Animal spirits, right? And the worst thing you can do in this type of environment is to get in front of yourself. Try to outsmart the market time at top, sell early, and then you're forced to buy at a later date at a higher price and give up that beautiful entry that you have, particularly if the trade is free. Folks, I can't stress this enough. The work we did in April through June set us up to be able to hold for the next 6 months in a lot of these big positions risk-free. Now we're watching everybody buy everything at higher prices than when we did, and it's just juicing our trades even more. Eventually there's going to be a pullback or a correction or a consolidation. Did we get that last week? 2 weeks ago, potentially. Could that be it? This little blip here? Thursday and then Friday, that 2-day session? Maybe. I don't know. What I do know, though, is this is a bull market. We're going to continue to own leaders in tactical areas of charts and continue to let our biggest trades win as long as they're winning. Animal spirits are a great thing for a trader, particularly if you're in early. And we were able to get in early on a lot of these trades. A lot of you guys are sitting at all-time highs. I feel like I say that every single day, but I'm still getting messages and pictures and DMs of people with IRAs up 2, 3, 4, 500K this year. That's why we do it, folks. Obviously, we don't pander to small accounts inside of TTI. We're here with real money, moving real size into real trades. A lot of this stuff could potentially set you up, for the rest of your life. So make sure you take that into consideration before you start YOLOing everything. Risk should always be managed to the upside in bull markets, so make sure that you're cutting half off at 100% to turn those trades free and Let them ride, man. This is why you're here. There's not many times in the market where grand slams should be aimed for, and right now we're aiming for grand slams. So we're going to go through index and the Qs really quick. I wouldn't be surprised to see a pullback to fill the gap that we had earlier today. We talked about this in the Discord. Nothing to worry about. We come back and we retest kind of this 630, 640 area. Totally fine. $4 or $5 pullback. We're just going to load the boat more. This is a firm uptrend across the board. Short, intermediate, long-term trends all continuing to support that. Look at the beautiful 50-day, or excuse me, the 50 RSI bounce here. For those of you that don't understand when I say bullish momentum regime, I encourage you to go check it out on the playbook side, or excuse me, guide and tools side of the market research platform. The RSI is not a mean reversion indicator like most people use, which is buy the oversold and sell the overbought. I think that's stupid if you're a momentum trader. If you're a momentum trader, you want to get into trades that are showing incredible momentum, as long as the chart in focus is trending above the 50-day moving average, excuse me, the 50 RSI, which it is. We came down and retested it perfectly and bounced. You want to continue to remain buying that position and or continuing to remain in that position long. The Qs are the exact same idea, right? We came down, we retested it, we bounced. Perfect. I mean, it's just beautiful. You couldn't have drawn this up any better. Could this pull back potentially down towards 575 or 570? Sure, we're net buyers. I'm not going to get into the mental illness of the bear side of this stuff until the data suggests that we need to be more defensively positioned, which 2 weeks ago it did start to say that and then very quickly reversed. We're going to continue to press all risk into the market as best we can. Market breadth, this is a big conversation. I've been talking about it for the last week. 3 months ago, people didn't want to buy the market as we rallied because the Mag 7 was not participating. Only market breadth was. They said it's unsustainable. Whatever. Now they're saying that market breadth cooling off means that indexes can't continue to grind higher because Mag 7 is the only thing working. Whatever. The truth is that if you don't want to buy the market, you're going to find a reason not to buy the market. You know what I call those? I call those people losers. If they don't want to buy it, that's totally fine. But how dare you try to give me an excuse why I shouldn't be able to be in the market in uptrends? And we are. I expect the RSP to break out into new all-time highs relatively soon, confirming the latest shove upwards in the indexes, confirming both the Mag 7 and the equally weighted RSP and equally weighted NASDAQ are confirming the move. I think we have a lot farther to go. Last year we bottomed first or second week of August. It would be very, very funny and ironic if that happened again this year. I'm not saying it will, but from the beginning of August in 2024 through December, middle part of December, December 15th, if memory serves, was essentially up only. We made more money in that 6-month corridor than the first 6 months of 2024. I would not be surprised to see the same sort of action this year. Why? Because I think it all comes down to tech. This is not the most comfortable call to make, but again, you have to be comfortable taking uncomfortable trades when the data suggests it. I will tell you right now, I've been doing this for 15 years. The tech sector for the majority of the 15 years has been the place to be for your 401ks or the older folks in here. We know that the 2010s and even now into the 2020s has been defined by growth stocks outperforming. Everything tech is obviously the leader there, but tech did nothing, right? We've talked about this from July to February, so almost a year, right? Like 7 or 8 months, it did nothing. It ranged sideways for 224 days, did nothing. Then we saw from its peak in the middle of February through its bottom in April, a near 30% move to the downside. Folks, that is a bear market. That's what we would expect in a bear market. As a matter of fact, if we go back and we look in 2022 at its absolute bottom drew down 35% over almost a year. We did that in only 2 months. This is the beginning of a new bull market. It is. It's the beginning of a new bull market. Not only did we consolidate sideways and correct sideways for a year, but we also corrected through price through a 2-month drawdown. That is a bear market. What happens after bear markets? Generally speaking, a bull market, generally the bull market doesn't fizzle out after 4 months. This is the beginning of a bigger move higher in tech after a year of nothing and then a big sell-off. And semiconductors. It's the exact same idea. What did semis do for a year after peaking in July? Nothing. Essentially right here is where we peaked in January. This was the deep seek stuff. So 200 days, we went sideways. From the deep seek stuff peak all the way to the bottom, we sold off 37%. Go back. This was a particularly brutal bear market, bear in mind. We sold off 47%. So again, folks, this is a new bull market. This is AI bubble in play. The market shook people out over time and price, and now it's ripping into new all-time highs. Don't give in to the mental illness that it cannot continue. continue to play the charts as they show up. And we're also waiting for this ratio in tech against the S&P to break out. If you go to the weekly, I'm not going to remove all this stuff and make it pretty, but we are, I think, within 1%, if I'm not mistaken. Are we within 1% now? We're within 1% of 25-year highs. Telling you folks, we're on the cusp of something great. A cusp of something great. There's not many times where you want to push the gas pedal down, bat for grand slams. This is it. Go and look at consumer discretionary really quick. I think this is an important area of the market right now. We just put a Tesla trade on, so that's cool. First Tesla trade we put on in a while. But consumer discretionary has kind of been that lagger group of the growth stocks. Comms and tech are already up at all-time highs. Consumer discretionary has yet to join us, but here we are within a couple ADR away, ADR of 1%. We're about 5% away from an all-time high. I think it's coming, folks. I don't think it's an if, but a win. And if we look at RSPD against RSPS, which is your offense versus defense, people were complaining over the last couple of weeks that, oh my God, we're slowing down. And here's a big middle finger to everybody saying, nope, you're fucking wrong. Offense remains on the field. And as a matter of fact, we're on the cusp of breaking out to new all-time highs, going all the way back to 2000. Again, there's not many times that you're going to find where the market is giving you the green light to push the gas pedal down and bat for the grand slam. This is it. If you don't believe me, that's fine. You're probably in the wrong group, but I'm in a group of winners, and a lot of our portfolios reflect that. I think the most important chart right now, particularly for where we're at in the market, total crypto market cap. I know I've beat the death out of this chart, but we're continuing to rally here, up and over 4 trillion, broken out to new all-time highs. We see that in Ethereum and Solana, and Bitcoin continues to rally here. Right? We expect by the end of this cycle, we could be touching somewhere in the 6 trillion range. That is unbelievable, and yet we're here. What does that potentially mean for the trades that we have on in Solana and IBIT, or Bitcoin and Ethereum? Think about it. Speaking of liquidity, Josh talks about this all the time, but total crypto market cap without Bitcoin and Ethereum is about to break out to all-time highs as well. Above 1.14 trillion, we're at all-time highs. This triggers a rush into altcoins. Some of the more risky areas of the asset class, the smaller market caps, etc. We're on the cusp of something amazing. My way of playing this is directly being involved heavily in Solana, but also follow Josh's trades. He's in the trenches finding these opportunities that will go 1,000, 2,000% spot. It's not an if, but a which one will do it. There will be a handful of names that absolutely rip, and we'll probably be in front of a couple of them at least. Last altcoin season, we did the same thing back in 2021 through 2022. We were in some that ripped like 50,000%, and it was turning like, it was like $500 into 100 grand. I mean, we had that. Not saying everything's going to be that way, but the opportunity will be there. Okay, you're not going to have that opportunity in the TradFi market. We're on the cusp of something special. Okay, having said that, Bitcoin looks good. Right? Starting to get the push up and over. We're trading 121. We just added into the IBIT trade. We have a lot of IBIT going back to the $100,000 breakout, bull flag breakout. I mean, this is like TA 101, folks. TA 101, bull flag break, consolidation break. Come on. If you get nervous about this stuff, you're never going to fucking make any money. You got to let this stuff ride. The market does a great job at pulling profits away from people that can't sit still. Ethereum, 3.5-year high. We're on the cusp of an all-time high breakout. First PT up, 5,100. Next PT up, 6,300. I think it's going to come faster than people think. Okay, last one that I want to talk to in today's session is Solana. This is the name that we're going to be opening up more of today. I get it. Let me make my case really quick. We're going to start the actual trade ideas with Solana. So this is the first trade we're going to take today. Solana, Ethereum is the big winner for us. And while I'm still allocating into Ethereum, as a matter of fact, our January 2027 position just turned free. Imagine that, folks. We have a year and a half worth of expiration in an asset that's being fucking championed by Tom Lee, which is the Wall Street's biggest cheerleader. We have a year and a half, and it's free. It was 110% today. Are you kidding me? Absolutely fucking phenomenal. That trade could be the trade. Who knows? I have no idea, but guess what? It's risk-free. So let's leave it alone for the next year and let it surprise us. Solana, though, keep in mind here, has, from its current positioning, a better opportunity to outperform over the next 6 months. What do I mean by that? It's not that I think Ethereum is going to not be better than Solana in the long term. I think it will be. But this is what clearly differentiates you guys from the assholes on Twitter and other Discords. Where is the best R2R right now? Where is the best trading opportunity with our limited amount of capital? Ethereum's market cap is damn near 600 billion. When we entered this, it was 200 billion. So congrats, we tripled the market cap. We captured the entire fucking thing. Okay? We know total crypto market cap's going up. We see altcoin season about to start. Solana's market cap is 100 billion. It's 1/5 the size 1/6 the size of Ethereum. But it's still a blue chip. It's still indexed on Coinbase. It still has its own ETF. So from a market cap standpoint, as liquidity enters the market, is there a better shot at Solana overperforming against Ethereum, or is Ethereum going to outperform? From a pure market cap and liquidity standpoint, where we stand right now, Solana will probably outperform Ethereum on a percentage basis over the next 6 months. That's not to say close your Ethereum trades. For the love of God, don't do that. It's to say that we should be allocating our scarce capital to Solana right now, the stuff that's sitting in our account that we've been waiting to deploy. Above 206, price target is 260. Above 260, price target is 415. We doubled the market cap in Solana to 200, 250 billion. This is now a $400 coin. Again, doubling would still be less than Ethereum's market cap. We're looking for a 100% move. Ethereum will probably double, but if it doubles, we're looking for an $8,000 price target. That's reasonable. I think it could happen. But our PTs are at 4, 5, and 6, at least in the shorter term. So right now, I want to add more Solana. Above 206 is my trigger. Yesterday I mentioned I added some more. I got lucky somewhat, right? I bought the day before it rallied 6% or whatever. You know, I'm looking at adding more. So here's what we're doing. Instead of reinventing the wheel here, I'm looking to grab, excuse me, my voice is going out here, so I'm trying to struggle through this. To the January 2026 $30 calls for approximately, and they could be a little off from where they were when I looked. They could be a little bit cheaper now, but I'm looking to add in. So I have a current position in Solana. I have the $30 calls for January. They were down as much as 50%. They were up as much as 15% today. I added in yesterday. I'm adding it again today, but the official trigger is above 206. I know this is a short-term session. We're looking at the shorter-term stuff, but I think this is one of those trades that if we don't act on it now, if it does take off, it'll be very hard, because once it breaks above 206, it's no man's land up to 260. It's anybody's fucking whatever you want to do at that point. And I don't like those types of trades. I want to be in just before the move occurs or right at the move, and this is to me an opportunity to add in here with relative expectation we break above 206 in the coming days or maybe a week. Well, look, I thought we'd potentially do it today. Okay, so first trade, January 16th, 2026, $30 calls, adding in 375 approximately. The next trade I want to take, remember the idea here, folks. AI bubble theme, macro liquidity theme. We have a tactical portion. It's that idea that we came up with the mock portfolio back at the beginning of August. This is that macro liquidity play. Let's talk about the AI bubble play. Apple, right? We're looking at a large cap tech stock. We own a lot already. We own NVIDIA. We own Microsoft. We own Tesla. It's kind of a fringe AI bubble trade. We own AMD. What about Apple, right? I'm an asshole. I said, I don't want to own Apple when it's ranging down here. That fucking sucks. And then earnings came out, and all of a sudden the market said, well, you're a fucking idiot. It's going to rally. So here it is, up 2%. So this is the trade. This is the idea of Apple, right? So first things first, I don't care about opinions on whether or not you like the product. I don't care. I care about price. We're above an anchored VWAP, going back to the all-time high. The fixed VRVP is telling us that a majority of the demand was below 220. We're currently trading 234. We're above 200-day moving average, starting to slope to the upside, and we're in the beginnings of a 200-day moving average. Just like late April, throw out the rational side of the brain that kept us alive for 200,000 fucking years, traversing this, the fucking tundra or whatever, and just buy the fucking uptrend. We have enough evidence here to tell us to do it. So that's what we're going to do. We're going to do this in a two-pronged trade. You have every opportunity to take both or one or the other. The first is going to be a short-term Apple trade. It's going to be a September 19th, 2025, 245 calls for approximately, and at the time they were going for 250. They're up probably a little bit now because the market is continuing to rip Apple. But the goal here is long-term exposure. Same idea we had with NVIDIA, same idea we had with Microsoft and Cisco and IBM and all of these big trades that we're in right now. We want to take the short-term trade, and if it hits, we're going to roll that out to long-term exposure. That's the idea. Right now, 245, approximately 250. I don't know what they're going for right now, but I wouldn't pay more than like $3 for these because we only have like 6 weeks, 5 weeks to hold these things. So it's a quick trade. 245 was within striking distance. At the time, it was like a 0.25 delta. I don't know what it's at now. But the bigger goal is the January 16th, 2026, $300 calls for approximately, and at the time, they were going for only 80 cents. Now listen, We have to be on the same page here, folks. That's why you're here. The longer term trade has a delta of 0.15. What does that mean? It's going to move slower. For every dollar Apple moves, the contracts are going to move 15 cents. It feels like you're watching paint dry. But the overall price target above 260, which is the all-time high breakout, has got to be 300. It's the nice big round number. It makes the most sense. We know that that is what markets tend to be gravitated towards. Human psychology. It's really funny. You go through the charter market technician stuff. Nobody fucking knows why. But human beings are inherently drawn to big round numbers. If we're above 260, next PT up is going to be 300. From a fib standpoint, it's 313, which puts us $13 into the money or more. 80 cents, they're going to move slow. So this is your opportunity to establish a longer term position. You don't need to go full 1 hour if you don't want to. $300 calls, that's the ultimate goal. But the short term stuff is meant to be parlayed into the longer stuff. If we hit the short term trade over the next 4 weeks, we can use all that profit from that trade to roll it into the Januaries. So the way I'm going to play this is I'm going to start a position in the January 16th $300 calls, 80 cents, $1, whatever they're going for right now. It's not going to be a full position. And then I'm going to take the short-term trade, and if it works, I'm going to use all that profit to roll into the January $300 calls. You can do it either way. You could take just the long-term, you could take just the short-term, you could take a little bit of each, whatever you want to do. But I think, look at Tesla. We grab Tesla. It's up into multi-month highs. There you go. The chart says, let's take a stab at it. We did. It's working for the most part right now. Apple's doing the same thing. Right? And we have Microsoft, and we have NVIDIA. We have we have the Google trade now. We have the Meta trade now. Mag 7 is trading at all-time highs and leading the market higher. This is the time to strike before the all-time high breakout. Okay, so again, short-term trade September 19, 2025, 245 calls, approximately 250. January 16, 2026, $300 calls for approximately 80 cents. Like I said, the valuation is going to be a little different because Apple is continuing to rip here, and I wrote this list up about an hour ago at this point. Last trade I want to put on. This is the tactical portion of that mock portfolio. Just a high beta trade. That's it. Rocket. We just went through it yesterday. I'm taking the short-term trade here to potentially move into a longer-term trade targeting the 27.41 move. How I want to play this is the September 19th $20 calls for approximately $1. Now you could go out a little bit further and get the 0.25 delta if you want, but $1 is cheap. It's easy. There's volume on it. I'm not going to try to overthink this. I think a pop above 19.5 gives the $20 calls an automatic bingo, and then above that, I think we can really move these things maybe $3-4 a pop, and then we can use that to once again roll these out into some longer term expirations to target the stage 1 breakout and do a stage 2 uptrend, which would be the 27.85 target in the 41. The goal here is to take the short term stuff, profits, move it into longer term trades. So when the market pulls back or whatever, we're not freaking out about everything because we're using house money to take the longer term stuff. The market's not going to rally every single fucking day. It's not just going to go straight up, although I wish it would. So we always have to think about this from a risk standpoint first. How can we avoid putting more capital than we need into trades? And a great way to do this, which we've been doing for the last 4 or 5 months now, short-term stuff on these high beta breakouts rolled into longer-term stuff. Okay, so here's the tactical portion. AI bubbles, the Apple play, and the macro liquidity is the Solana play. All right, so again, going through these, and then I'll answer questions. Let's go through Solana. I'm adding into the January $30 calls for $375. Apple, you have a choice, September 19th, $245 for $250, or January 16th to 2026, $300 calls for 80 cents. Mix and match how you see fit. Rocket. September 19th, $20 calls for approximately $1. I will type these up and post these over on the market research side as well. Okay? The Apple 245 calls are already 330, so we're going to, do what you want. I'm going to wait for end of day anyway. We'll see where we're at. But that's something that I'm going to want to grab. Like, market's hot. And it's challenging sometimes to try to bottom tick these things. I think the bigger goal here is to just not miss the move. I think 330 is probably not something I would be willing to pay in the short term, but we'll see. End of day. Spreads are a bit wide on SOLZ. So spreads are wide randomly throughout the day. It's not always. So for example, go to SOLZ, go to the Januaries. You can see right here that the 180s, spread's not really that wide actually right now, but for the 35s, for example, the 180 to 4, this is huge. So I've had a bunch of questions on the Solana trade in particular. People sometimes are like, how come I'm down 60%? I get it. It's a longer term trade. I'm particularly not worried about timing the absolute bottom. I don't care about holding through red. It's something that you're gonna realize either the easy way or the hard way. I don't care about holding a swing trade in the red as long as I have time, as long as the trade idea is still active, right? But one big thing was before the 35s were added, the 30s would go down to like 1 penny or 5 pennies, I think, or $1. And that would drastically move the mid price on the contract. So you'd see like a negative 60 or negative 70% open P&L on that trade. But what you don't understand is as soon as you go and throw a bid on the book, all of a sudden the bid tightens back up and all of a sudden that goes back to like negative 20 or negative 30. So it's not that big of a drawdown. It's a lack of liquidity on the book, a little bit of fuckery going on. The 35s are doing it right now. This bid should probably be somewhere closer to like 410, 420 to make it match up with the rest of this stuff. I guarantee if you try to buy it right now at 180, it won't go through. But if you're holding this, and let's say you bought it at 450, you're down quite a lot right now on this trade. So a little bit is fuckery on the options chain. And if you're looking to buy this stuff, how I like to buy it, particularly when the spreads are a little wider, I don't think this is particularly bad, but I always try to hit at the bid first and then step up in 5 to 10 cent, I call it stepping up. 5 to 10 cent like limit orders, and I'll randomly get filled sometimes to the lower side, which is great. I've never ever go for the ask price. So sometimes I can get filled at 330, 335, 340. I'll get wicked down in there and filled. Sometimes you're just taking the mid price. It is what it is. So some of that stuff, if you're looking at your open P&L and you're like, why is this down so much? A lot of it is just that the bids drop out. As soon as somebody goes to buy that fucking contract, bids tighten back up, and then you'll see what makes these intraday valuations on your portfolio sometimes super volatile. So the short-term trades, as you can tell, we're only targeting like 5 weeks right now. That's it, 5 weeks. The idea here is to hit it fast and then use that money to roll into longer dated stuff. Okay, it's been a fantastic last 3 or 4 weeks. We're going to continue to hit this market the best way we can. It's a bull market, but remember, I have this conversation inside of the Discord every single day. I'm getting DMs from people with portfolios at all-time highs, people making like 6 figures in the last month, more than that in certain circumstances. It feels great when the market's hitting, but please, I beg of you, do not get complacent with managing risk. Eventually there will be a pullback or a consolidation, and that open P&L will drop. It's part of the market. Make sure that you're covering your ass as best you can on the way up. It's the easiest way to hold through pullbacks, consolidations, etc., right? Last thing I want to say is your equity P&L curve, for the most part, should look like a standard uptrend. 5 steps up, 2 steps back. 6 steps up, 3 steps back. 8 steps up, 7 steps back. 9 steps up, 3 steps back. And you overall up 11 steps. You're never going to be able to capture the absolute top of your open P&L, so don't even fucking try. Because if you try, you're gonna sell great positions early. You're going to miss out on bigger moves. Don't focus on trying to top tick every trade. Focus on the bigger picture here, folks. Manage your risk to the upside. Let the trends continue to work for you. You'll probably end up making more money. I can't say you will for legality reasons, but you'll probably make more money. Proof is in the data. Okay? That's it. If you have any questions regarding anything that we went through today, feel free to leave them as a comment below the video when I post it on the market research side. The trades will also be appended to the post as well. Enjoy the rest of your Wednesday, and I'll catch you guys in the chat room after lunch. See ya.